Happy 5M Monday, everybody. This is such a special day because it is the day after Warren Buffett's 90th birthday. He is the founder of the 5M strategy, and he is definitely one of my favorite gurus out there. I would not be here without him, let's face it, and nor would lots of other people. He has made so many people rich, and it is my hope to spread his wisdom and to let all investors out there learn the wonderful wisdom he is sharing with us, and he has provided me over the years. And today, because it is his 90th birthday and we are talking about mindset, and I am going to focus on what makes Warren Buffett great. What makes him such a great investor? Why is his mindset so good at this? And why is he so successful? So I just prepared a little presentation here. So I'm just going to share my screen. All right, so we're going to do a little case study on Warren Buffett today. And for those of you who are maybe youngins who don't know Warren Buffett very well, he was born in Omaha, Nebraska in August 1930. Yes, the man is 90 years old today, and he's still working, still making tons of money for lots of people. He's still sharing his knowledge. This guy just doesn't stop. He is the son of a politician, Howard Buffett, in the US. He made his first trade at 11. This man has been brilliant and money-minded since a very early age. He graduated from the University of Nebraska in 1950, and that is also where he learned to invest from his mentor, Ben Graham, which he speaks of a lot. He took majority control of Berkshire Hathaway in 1965, so that is what Warren Buffett is well known for these days, is his role in Berkshire Hathaway. And according to Forbes magazine, he's worth about $75 billion. So this man knows what he's doing, folks. There's a lot to learn from this guy. So I really like to dive deep into what makes people successful. And because Warren Buffett is probably the most successful stock investor out there that has been in history, I mean, over the last 90 years, that's for sure, I'm going to be looking at him. So what makes Warren Buffett great? Well, Warren Buffett, he learns a lot. He is said to read about 500 pages a day. He is out there learning everything he can. He's very educated. So in his recent Berkshire Hathaway meeting in March, he actually talked a lot about the history of the stock market. So he knows his history and he does his research. When he doesn't know something, he goes out there and takes the time and learns about it. And one of the things he focused on in his meeting was that in history, he went over a whole bunch of stock market crashes, but the one that really piqued my interest was the one that was in 1929. So this was obviously the Great Depression, which I didn't know this fact until he actually taught us this, is that the stock market actually did not recover until 1951. So that's over 20 years, folks. When there's a big depression-like crash out there, it can take more than 20 years, 20, 30 years to recover. So knowledge is key in protecting your investments, that's for sure. So he knows the stock market goes in cycles. He followed the market cycle up and down, and he looks for indicators as to what is going to bring the market up and what's going to bring the market down. It's very similar to real estate, which I follow as well. So I've actually compared the stock market to the real estate cycle, and the two cycles are actually really quite similar. So So it's really neat to be in both worlds right now as an investor. He's also really realistic. He realizes that, you know, unexpected things happen. Like nobody expected the pandemic to shut the world down, yet it did. And he knows things like that, just they happen. Like, you know, if you think the world is always going to be hunky-dory and go as expected, and all your plans are going to turn out the way they are, well, that's not really realistic. So he's all about realism and being prepared for things that may come. He's got a long-term mindset. So his 5M strategy is based on looking far ahead, minimum 10 years. And when he's evaluating stocks, he's not just looking at short-term gains. He's looking at, you know, what's going to happen in 10 years or 20 years from now. So he's looking at an investment as something that he wants to keep forever. He wants to buy shares, and ideally he never wants to sell them because he's done a really good job of analyzing those stocks for the long term. He also believes in being prepared for the worst. So in the Berkshire Hathaway meeting, he revealed that Berkshire Hathaway is currently holding $125 billion worth of cash right now. And he wants Berkshire to be Fort Knox, the safest place for money. And it's very interesting for me to hear that because, you know, after looking at all of the economic things that are going on right now, especially with the pandemic, it's a really good thing right now to be Fort Knox. And that's something that all of us investors should be looking at as well. He, of course, is the most rational person I know. His shareholder letters exude rationality above all. I really encourage you to read some of those letters. It's just really incredible, some of the insights that he puts in them. Now, this man knows what he's doing, and he is very decisive when he makes decisions. He will either get in or get out quickly based on his analysis. He holds integrity. Very few people in this world actually hold this trait, and I find it one of the most admirable traits that there is integrity. Someone who is willing to stand up for their mistakes and take responsibility for them. And he has done that in spades. So when he purchased stocks in 4 major airlines last year, and the pandemic happened, he realized, geez, you know, this is a really big mistake. And he took no time whatsoever. You know, as soon as he determined it was a mistake, he was out. He sold them all of them. So he's very decisive and very quick in his actions. And that actually really helps him get to where he is as well with his investments. Another thing I really like about him is he's very empathetic. So when the pandemic happened, he did what he could to support the local economy. The Berkshire Hathaway meeting is a huge event every year. It draws thousands of people and supports thousands of businesses. And he did his best. He kept his spot in the Omaha arena, even though there was about maybe 5 people in the whole arena. He still kept the event. He didn't cancel it. He wanted to keep his commitment to that, and he did what he could to support the local businesses. And he's very empathetic. He said, you know, he feels sorry for all those businesses because this event really brings in a lot of money to them every year. And so he was very empathetic to that. He's also very big on surrounding himself with like-minded people. He's created the culture of Berkshire Hathaway, where everyone at Berkshire has a very similar mindset. Everyone's open-minded and respectful. They share their knowledge for the betterment of the company, and that's a great place to be. He also believes in having really good relationships. He knows everybody by name, which is just incredible. He knows his clients personally. He calls them money with faces attached to them, and Another thing is he respects people so much that he is self-reliant. So he does all the analysis himself. Sure, he's got some help, but he will definitely go over someone else's analysis before making a decision. He doesn't like to borrow money. He's very well known for that. He doesn't borrow money. He pays for things in cash. He doesn't buy anything at full price. He's a very humble guy. He doesn't live in a giant mansion. He lives in a very, you know, middle income neighborhood, in a regular house. He drives regular cars like everybody else. He's not very flashy, which I really love that about him. He's a very humble guy, and he likes to, you know, relate to the normal person out there. And he also realizes that there are times when cash just kind of loses its value. And so he mentioned in the Berkshire Hathaway meeting that he doesn't want to be dependent on the kindness of anyone else, including his friends, because he realizes there are times when even his friends don't have money, and it's not a fair thing to be asking them for money. So this is a hint of what he thinks is going to happen. He thinks, you know, hard times are ahead and that we need to prepare. He also believes in knowing your limits when it comes to knowledge. He only buys businesses he understands. So he's gotten a lot of criticism over the years for not buying into the tech market. And that is because he only buys things he understands. He's a 90-year-old guy. He doesn't understand computers. And even though Bill Gates has pushed him to buy Microsoft shares over the years, he has declined because he just doesn't understand computers. And he doesn't really use the computer. So, you know, why would he buy something he doesn't understand? He's also a very patient guy. So he realizes that the stock market is very emotional, and the prices change every day. And he has an advantage because of his patience, he can wait for the price that he wants. He never buys anything full price. And so he just waits until he sees a good deal, and then that's when he goes and buys it. Okay, so he doesn't give in to peer pressure at all. He's very certain with his investing strategies. He believes in investing, not gambling, and he's always doing the analysis to back up his decisions. So this man, because he's doing the analysis all the time, he's really confident. Even though he's had a lot of criticism over the years because he hasn't bought anything in the last 3 years or so, his analysis has shown, you know, we're due for a correction. So he's decided, you know what, I'm not going to buy until I see a good deal. So in recent years, there really hasn't been many good deals. I haven't seen any myself. I've done a lot of analysis on many companies, and I agree with him. They're all very well overpriced. Why would you buy a $10,000 table if it's only worth $5,000? I'm not doing that either. So he also believes, you know, when it comes to buying a business, management is key. He really looks for businesses that have honest managers with integrity, and they really have a genuine interest in the company. He also realizes that IQ does not equal wisdom. It does not equal rational behavior. So he's looking for qualities in management that have that balance between being smart and being wise. He's also he's also the founder of diversification in a sense. He believes that, you know, he doesn't like to put all of his money in one business, but he also believes in putting as much money in really good businesses. So what he's looking for is really good quality before he buys. So another thing that I really love about Warren is that he is open and honest. He makes sure that his team understands what he's doing. He writes his shareholder letters, which really explains what he's doing every year. And he's also really sensitive to human rights. Now, this is something that is really was surprising to me. I mean, you know, he's a white man from Nebraska. So, you know, I would think that he was maybe a little more ignorant to such things, but he's talking about human rights all the time, folks. He realizes that, you know what, we've really missed the boat on talent because of our biases towards women and minorities over the years. I mean, while we've really created a wonderful society, just imagine how much greater we could be if we just include everyone's talents into the world we live in. So he's really big on human rights as well. So to finish things up, one of Warren Buffett's quotes, of many, many brilliant quotes, is that the best investment you can make is an investment in yourself. The more you learn, the more you earn. And I found that to be true for myself. And that's why I'm putting out these videos, because I believe that knowledge is really the key to success. And it's your power, folks. It helps you to make good, rational, wise decisions. So keep up the good work. This concludes our section on mindset. So next week, I'm going to be starting to talk about the second M. Yeah, meaning. Yeah, so stay tuned next week, next Monday. We're going to dive into that, and we will see you soon. Now, if you like this video, please subscribe, share, like this video. I'm telling you, everybody needs to know this stuff. We'll talk to you soon. All right, bye.